Welcome back to LiveFree Effects, where we cut through the noise and focus on what truly matters: price action. Ladies and gentlemen, in today's video, I'm going to be walking you through a scalping strategy that is 100% focused on pure price action. There is no lagging indicator, no lagging tool of any kind. As a beginner trader coming into the market, or even a seasoned trader, having a deep understanding of price action can give you a serious edge as a scalper. And in today's video, I am going to be walking you through some of the things that you need to understand from a price action standpoint. In order to scalp the market effectively, I am going to be sharing a scalping strategy that you can essentially use, take to the chart backtest, and get your trading to the next level and ultimately improve your scalping and get the results that you're seeking. If that's something you're interested in, make sure you watch the video to the very end. And let's waste no time. Let's jump right into it. So when it comes to scalping the market successfully, there are a few things that you always want to keep in mind. Scalping is essentially like swing trading, but you're just trading on the lower time frame most of the time, right? So you're not going to be scalping on the daily, you're not going to be scalping on the 4 hours. So as a scalper, you're going to be on the lower time frame, usually the 1 minute and the 5 minute time frame. That is where you're going to scalp. And the reason why you do that is because those time frames allows you to minimize your risk while also maximizing your gains at the same time. But before we dive into the particular price action strategies and price action tips that you need to be aware of, the very first thing when you are scalping or you are learning how to scalp is to ask yourself some psychological questions. How are you in the market? Are you quick to make a decision or slow to make a decision? Because that could determine whether you're going to be a good scalper or whether you should stick more towards swing trading. For many years, I was a swing trader because, my decision-making process, because of my lack of understanding in the market, it was hard for me to make quick decisions. I needed a little bit more time to develop myself and to learn a few of the things that I'm going to be walking you through in this video to scalp successfully. So it's always important to know where you're at in your journey, because that is going to determine which type of trader you should be. So the very first thing is you should ask yourself, how are you in your decision-making process? Are you quick? Are you slow? Because scalping, you need to be very, very quick in making decisions. But the other thing is your ability to control yourself and regulate your emotions as a scalper. The advantage that you will have is because you are sitting in the computer and you are looking at the market for the duration of your trading period. It's going to be hard to be scalping while you're going through your day, whereas as a swing trader, you can kind of place a trade and just monitor it throughout the day, throughout the week. But as a scalper, you are going to be in the heat of the moment. So the advantage you have is you are in a quiet setting, at least I hope, where you can focus on regulating yourself and staying calm so you can, make the best possible decision. So that's the advantage. The difficulty is the market's moving and you need to learn how to regulate yourself and how to, manage your emotions so you don't make emotional decisions and you don't take a million trade as a scalper. So diving into some of the price action things that you need to be aware of when you are scalping. With this particular strategy, scalping the market involves always starting from the higher time frame. Yes, I know a lot of you guys scalp and you just jump straight to the 5 minute or the 1 minute. You need to get higher time frame perspective because, ladies and gentlemen, higher time frame is key. When you're coming into the market, your number one task is to analyze, and analyze starts from the higher time frame, the larger time frame, being able to determine where the trend is, right? Who is in control of that market? Are buyers in control or are sellers in control? With this particular example here, we're on the 4 hour time frame, which would be considered a higher time frame perspective. The daily time frame would also be considered a higher time frame perspective as well. And of course, the higher the time frame, the larger the perspective. You can go to the weekly, but the 4 hour, the daily, those are pretty good when you are scalping. So taking a look at this example here, we can kind of see that buyers are in control and price is making higher highs and higher lows. We are in a buyer's market. So based off of this, it doesn't necessarily mean you can't make money on the sells, But it's really important that even though you are scalping and you are still going for the little movement, you might be going for 5 pips, you might be going for 30 pip, you might be going for 20 or 15. It's still important that you stick with the institutional flow, the higher time frame perspective, because as traders, we deal in probabilities. And when you place your trade and you place your trade to the downside when price is moving up, or maybe you're trying to capitalize on these moves have low probability. These are times where you should either be sitting on the sidelines and waiting for more buyers to come into the market, because this has a higher probability, and you can see how easily price flows when buyers come into the market. So just because you are a scalper doesn't mean you should be playing both sides. You should always still try to place your scalping trades in the direction of the higher time frame perspective. So right here, what we're taking a look at right now is we can see that buyers are coming into the market. Now, the one thing is, if buyers are coming into the market, you want to identify possible areas that you can reach for, that price can reach for, that you can target. So right there, we have this high as an area of interest. We can zoom into this process, into this point. So that's the whole point of starting off with the high time frame, identifying who is in control, right? And what you should be doing when you scale down to the lower time frame, and also identifying possible areas that you can target, that you can reach for. So right here we have this, level. I believe it is 2666, right? So this is a high based on where price is right now. If the market continues to run, we can likely target this high and possibly this high. So our job right now from the higher time frame is essentially done. We can scale down to the 1 hour time frame and see what price is also doing at the same time. So from the 1 hour time frame, what we have here is we have, price making lower lows and lower highs. So you want to start to pay attention to the market structure, because that is going to be critical. Because sometimes when you have a bearish market structure in a buyer's market, it might mean that buyers are not ready to dominate right now. So based on what we see here, we see that sellers are coming in, boom, and we have this low right here, and we have price make a lower low and then a lower high, and the market essentially kind of failed to close below this level, and we started to get an increase in the buying momentum coming to the market. So right now, one of the main things that we see with this particular trade is that we have a break of structure right here. So price was making high highs and high lows, and all of a sudden the market started to make lower lows, low highs, and lower low. But now we've seen a change in the overall market direction as more buyers have come in, right, and taken out this high. So this is the first indicator. In one of my previous videos, I talked about letting the left side match the right side. The higher time frame perspective is bullish. But now when we come over to the lower time frame, we're starting to see that, okay, there is a possibility that sellers are in control. So all you simply want to do is you want to wait for price to now match the higher time frame perspective. And we've seen the first step. We have a break of structure here. We have a pullback. So as you start to scale down to your lower time frame, your focus is, well, if buyers took out this high, what is the next possible high that they can take out? It means that they can take out this high and price could potentially reach for this level. So you scale down to, now we can go down to the 5-minute time frame to give ourselves a little bit more perspective. And what we can see here is, boom, right? We're seeing the entire setup here, and we're seeing a break of structure overall. But because we've started on the higher time frame, we know that we want to be a buyer. So based on the higher time frame perspective, based on the trend, we are looking to go with the big boys, the guys who are in control. The next thing is market structure. You want to play with that. And if you're coming into the lower time frame and you're seeing bearish market structure, it doesn't mean sell, because you don't have the permission from the higher time frame, because the probability of sells right now are very low given the current market that we are in, right? I am not in the business of predicting reversals. So it's important that, when you're coming into the market, you stay focused on the higher time frame and what the higher time frame is doing. And if it doesn't, the lower time frame doesn't match the higher time frame, you just have to wait patiently. So right now we're coming into the market, and currently right now it's about 740. When you are scalping The next thing that you want to focus on is showing up at the time where there is liquidity. Scalping means coming in and acting out on quick short-term price movement. It is better to do that when the market is not slow. Right? So you want to do that during a major session, whether it's a New York session, whether it's the London session, and if your pair moves during the Asian session, you can also scalp the Asian session as well. I personally like to scalp the New York session. So a lot of the time what I'll do is I'll come into the market just before the New York open at about 7:30. And boom, we see what price does. So right now it's about 7:45. What we're seeing here is we're seeing a huge drop down in terms of momentum. So sellers are dominant. So you as a trader right now, you're not worried. You're calm. You're staying relaxed because this right here doesn't match the bias that you have created on the higher time frame. It is not going with the overall time frame, higher time frame perspective, right? Sellers are dominant. So this is where you come in, you've analyzed, and this is where you start to sit on the sidelines. You anticipate because you're looking for price to make the first move and tell you that buyers are coming into the market, right? Yes, you could have made money scalping and taking a short here. You would have made money, but of course, over a long period of time, you are not going to be consistently profitable because you are not factoring the concept of probability. We deal in probability, so it is always best to stick with the highest probability trade direction. So right now we're seeing sellers dominate, calm, we're staying relaxed. Now we're seeing a bit of buying momentum come back into the market, but the market structure right now is still very bearish and sellers can come in. So now you're just essentially waiting, and wow, we're seeing a huge surge in terms of liquidity, and buyers are coming in and price have finally broken above this high. So this right here is price making the first move. Of course, you could have capitalized a lot on this move in anticipation that we're going to be seeing a continuation to the upside, right? We had this break of market structure, right? So you could have placed a trade right here and you could have made some profits, right? Or you could have waited for a change in the overall market structure. And that's essentially, what the game plan is. So right now we're seeing a break of structure here. We're looking to capitalize on the small moves. And now that price is trading back into this area again, this is where you have a market structure break, and this is where you can start to look at the possibility of getting involved in a trade as long as this low holds, right? So the goal is to look at an area and say, okay, well, if I place my stop loss, right there, for me, I usually like about 30 pep, right? Or 30-ish pep. I can place my stop loss just right at this low, but let's see what the market decides to do. So what we're seeing now is we're seeing a lot of bearish momentum come into the market. And now we're seeing the possibility of price continuing its move to the downside. So here, okay, beautiful. Now, if we get involved in this trade in anticipation that more buyers are going to come into the market, let's watch a little bit and see how prices, this was, okay, wow. So sellers came in and they're still struggling. But overall, this is where you start to anticipate the continuation to the upside because of the market structure break and because of the higher time frame perspective that we have. So for me right here, this is where you get in on a long trade and you can look to take something off the table either at this high that was established, and then this could be your first take profit, and this can be, the next take profit. But because this is gold, these are some pretty large objectives. So I always recommend setting sort of like an in-between target. For me, I usually do about 30 pep. So we can say from here, just set your target. That way, if the market hits this level, we can take something off the table, right? So it doesn't always have to be 30 pep for you. It could be something, right? Because you are looking to take advantage of price movement, but you want to pay yourself for your time. Trade management is critical to success. Some trades are going to hold a little bit longer, right? Those can, give you a big return. But most trades you take, you should try to pay yourself before the market essentially takes back what it gives you. So I like to keep that in mind. And what we see here is we're seeing a little bit of a push. Okay, beautiful. Let's see here. And now we're seeing essentially the continuation to the upside. So our first target has been hit. This is where you move your stop loss now to break even, and if the market runs, it runs. So technically, you don't exactly need to set any sort of higher target. You don't need to take something off the table with this one. You can now just have a open-ended thing, and if the market keeps giving, you keep moving your stop loss. You can keep trailing your stop loss overall, and I usually like to do this as new highs and lows are forming. So there you go. So as a new low forms, I'm going to move my stop loss over to this level. So now, what was a scalping strategy that gave you a profit of 46 pep in the beginning? You risked about 37 pep. You closed your position, whether it's half your position on that, on the first scale out. Now, you're up essentially 140 pep. So this is how you can scalp the market in a manner that is still effective. And ladies and gentlemen, this is, this trade is still, within 2 hours, right? So this is, of course, 2 hours. You took something off the table within the first 50 minutes, and then the market continued to run. So you have a different option in terms of managing your trade effectively. And of course, this is where, okay, the market isn't stopping out. Let's see. Okay, so beautiful. If you held the trade, boom, the price would have essentially ran all the way. Let's see how much price is going to keep. Okay, let's see how much the market is willing to run. Price is already run. You could have taken something off the table here, right? I think the rest is just being greedy, to be honest. But overall, you executed this trade, with a scalping, method on the 5-minute time frame, and you left a position on that allowed you to make 190, pep. Right, and this is where you could have taken something off the table, and this was a higher time frame target that we set on, I believe, the 1 hour and the 4 hour as well. If you leave the trade, price can likely even hit this, but at the same time, risking 37 pep to make 190 is pretty good in terms of risk to reward ratio. So ladies and gentlemen, when it comes to scalping, a couple of things that you have to factor in is the higher time frame perspective. Always try to stick with it. Just because you are scalping don't mean you have to take a million trade a day. You just have to give yourself a handful. I usually give myself about 3 trades, right? If the first one doesn't work, okay, cool, let me try the second one if I think price is going to be giving me more. And then the third one, if the day is not really going well, but usually about 2 trades, 2 strike, that's it, right? But just because you are scalping the market doesn't mean you should be taking 5 to 10 trades. The reason why you're taking so many trades is because you are not following the higher time frame perspective. You're trying to play sellers and buyers at the same time. But if you can pinpoint who is in control of the market, right? Buyers are in control, and you get in and boom, right? Your scalping trade can give you, depending on the market that you're trading, huge returns. So ladies and gentlemen, when it comes to scalping, these are a few things that you want to keep in mind. Market structure is critical. High time frame perspective is critical. Giving yourself multiple strikes in the market and sticking, with the higher time frame trend. As always, I hope you found this video insightful. If you have any questions, feel free to leave that in the comments, down below. Thank you guys for watching, and don't take my word for it. Take it to the chart, backtest it, and see how it worked. Thanks for watching. It's Manuel from LiveFree, and I hope you're out there living free.